Markets never sleep, and the best way to get ahead of them each trading day is to have great information. First thing in the morning, before the opening bell. That's where this Money Show MoneyMasters podcast guest comes in. An experienced business journalist with an impressive background, he and partner Anthony Pompliano launched their newsletter more than a year ago. Now it's required reading for investors and traders looking to get a leg up on these markets. To find out what he thinks about this environment, including his take on tariffs, trade, jobs, Fed policy, the dollar, and more, we're going to get things going. My guest is Phil Rosen, co-founder and editor-in-chief of Opening Bell Daily. Welcome to the show. So, Phil, thanks for coming on. I appreciate you taking some time out here. Got a busy schedule, I'm sure. And speaking of that busy schedule, why don't you talk a little bit about your background, what it is you do with Opening Bell Daily, just because I haven't had you on the podcast before.
Yeah, thank you so much, Mike, for having me. It's great to be here. So I'm a journalist and financial reporter, but I'm also a founder of a media company. And this was about a year ago. I was at Business Insider, and I was a senior reporter there covering financial markets. But then I ended up quitting that job to launch this with my co-founder. And so far, let's see, about 15 months in or so. And we've had a great time. And the newsletter that I write every morning has grown to a pretty decent audience size. And what it is really, I write a newsletter 6 days a week. And one day a week of that is our Best Ideas Club, which is a stock pick based on an interview. And then the other 5 days a week is sort of a financial column and also a news analysis and commentary. So that's really what I've been doing for the last little more than a year. And maybe the context behind this is that when I was at Business Insider for almost 3 years, I wrote their markets newsletter every day for most of my time there until that product was discontinued in about 2023. So then shortly after that, I left, and we've sort of remastered and reconfigured an even better product, and we have a great time doing it.
Got it. I was going to ask you, so how did you and Anthony decide to work together on this? I mean, just kicking around over coffee or something? I'm just kind of curious.
Yeah, we got to know each other because we first met at a conference actually in 2023, and we wanted to build something together, and this became the most sort of clear opportunity in front of us with his experience and my experience and sort of the vision we had to build a media company. And that's really what I think it's become, something that straddles independent media and mainstream media based on the combination of our backgrounds, but also we have partnerships with Bloomberg. So we're on the Bloomberg terminal every morning. And then we're also on Inc. magazine every morning. So we have that sort of mainstream footprint, but then we also have the internet native independent media presence.
Got it. Perfect. Well, I'm glad you shared some of your background. I think we obviously have to talk markets here. It's amazing. Everything looked like it was falling apart back in that kind of March and April timeframe. Now, here we are right back close to new highs. What are your thoughts on this volatility and sort of the drivers that initially knocked us down and now seem to be building us back up?
Everyone was so scared when Liberation Day happened. And there's a great saying that I always come back to. It's that bears sound smart and bulls make money. And what we saw, this huge sell-off, right? And it only lasted really a few weeks. And then we're back to Liberation Day, Liberation Day highs already. And in the grand scheme of markets, this was a blip on the radar, blink of an eye. And if you didn't panic sell, you're making money. And that's really what this comes down to. It's really, it's almost a binary story. You either sold and listened to the media, right? And I say that as a member of the media. Or you did not sell and you remained optimistic that markets and the economic data and, let's say, all the political noise, that would all resolve itself and ultimately markets would come out on top. And that's what we've really seen happen. And I'm not saying that anything is preordained at this point. Markets can always go up or down. We don't know.
Sure.
But the bulls have proven out to be right so far. And I think if I had to make a guess, I think that's going to hold true for some time longer. And I don't think the Liberation Day chaos was people thought it was a fundamental shift in the world order and that this would break American markets and
Yeah.
that American markets would no longer attract the capital that it's been forever. Um, but really, markets have been just fine. And we've seen some change in inflows and outflows for, let's say, the S&P 500. But it hasn't obviously been material enough to cause a catastrophic change in the price of the market and the benchmark index.
Got it. Let's talk a little bit about, as we're recording this, we're a few days after we had the jobs data, most recent jobs data. We're a few days before a Fed meeting. Kind of what are your thoughts on the economic backdrop here?
Yeah, I think the big story really is the Fed going to cut or are they not going to cut? And obviously President Trump has been calling for rate cuts for some time, and the Fed has been pushing this patience narrative. And the Fed pretty much says, okay, we don't have the economic data yet to justify a rate cut. And then the president is saying, look, everything is booming, and we essentially need rate cuts because I think Trump is generally a low interest rates guy because that's a
Yeah.
very good catalyst for asset prices, and we know that the president watches asset prices. So if cuts come, asset prices will rip, and that makes the president look pretty good. So we got on Friday the latest jobs market data for May. And really, the headline numbers looked extremely promising. I think we had 139,000 non-farm payrolls in May, and that was above expectations for, I think, 125,000. And unemployment at the headline was unchanged at 4.2%. So really, it looks like, if you were to only read the headlines, it looks like the job market is stronger than expected and fine.
Yeah.
And I think generally it's not wrong to take that stance. And you saw every media headline come out and say, job market stronger than expected. Things look pretty solid. Economic resilience. The Fed is justified in holding interest rates where they are. However, I do think some of the details under the hood of the May jobs report were less supportive of that narrative. And
Yeah.
we actually have seen the unemployment rate fall for multiple months in a row. And if you don't round to 4.2%, it actually climbed. So it climbed month over month. In the prior month, it was at 4.187, something like that. And then this month, it was 4.244.
Got it.
So there is that marginal increase in unemployment. And something that's interesting, we also saw almost 200,000 people lose their jobs among prime working age people. So sort of the meat and potatoes of the labor market is shrinking. And also part of the job loss, we saw, I think, 600,000 or so loss of full-time jobs.
Yeah.
So that was, again, the lion's share of sort of this weakness we're seeing is in full-time and prime age working individuals. So that does suggest, I think, more weakness than some of the media headlines will suggest.
Got it. Well, it's at those potential turning points, even those decimal places make a lot of, that's what's important, right?
It's a trend. Yeah.
Yeah. Yeah. Let me ask you this. You wrote something recently. You said it's not so much politics that are weighing on the stock market, but a lack of clarity. And I bring that up because here we are, we're getting further and further into this 90-day pause period. We have all this stuff being talked about on the global trade front. Any thoughts on how that's going to shake out and what you might expect as we maybe get closer to that 90-day point?
Yeah, that's a very good question. It really is the question of the year for investors. I don't anticipate that we will get that much clarity anytime soon. And I think if you operate that as the baseline as an investor, then you'll be much calmer and you'll be less inclined to panic sell. Let's say if we get another Liberation Day scenario. And really, what the Trump administration has done so far, they have been extremely unpredictable and they've not played by the typical executive branch rules. They're doing all these things, pulling all these different levers that really have not been attempted before.
Yeah.
And from an investor perspective, that is chaotic, that is unpredictable. And from a business perspective, it's hard to plan your hiring plan, your corporate spending plan, all these things. So that has made markets extremely volatile. And but I think the thing markets are looking for is some sort of concrete narrative to grab onto. But because the Trump administration hasn't really given them that, and we have these deals that are reportedly up in the air, right? We're waiting on all these trade deals, but we haven't really heard much. On a day-to-day basis, we get new tariffs, we get tariff pullbacks. So it's very hard to predict as an investor. That's why I think zooming out is so useful. And I think the best investors will always take a long-term perspective, because if you look back to Liberation Day, we've already erased all the losses that we had, or let's say recaptured all the losses we had. So the clarity isn't coming anytime soon, but I do think the long-term focused investors, they will do just fine. And the people that are trading or investing based on the volatility of the news cycle, which has been extremely uncertain and absolutely chaotic, it's very hard to make money like that. So I think looking for the clarity, generally that's what markets want, but I don't know if that is necessarily the best North Star at this point, because clarity is seems very far away right now.
Got it. I want to get to a couple ideas about stocks in a second, but just first, I have to mention things like that, that are also big stories in the market. The dollar's decline, precious metals, and what's been going on there. Any thoughts on that you'd want to offer up here?
I will say the big performer this year, of course, has been gold, and another very strong performer has been Bitcoin. And I think let's say if you kind of clump those two assets together as just a consistent store of value, let's say, not to make the case for one over the other, but if you say gold and Bitcoin are consistently storing your value much better than dollar denominated assets, it's become very clear that capital is flowing to where it's treated best right now, which is in gold and Bitcoin. And I don't anticipate that slowing down. I think it's going to accelerate this year and in the years to come. And a big reason of that is because we know the government and every other central bank in the world will continue to print cash, right, into the money system. And that is going to make each single dollar you're holding worth less and less over time. And the opposite is true for something like Bitcoin and even gold to an extent, because those are assets that retain their value and actually appreciate over time, while dollar denominated assets, the dollar depreciates over time, which means the assets that they're backing are also weakening if you go by the strength of the dollar. So I do think the case for buying into gold or buying into Bitcoin is strengthening by the day. And we know that the government will never stop spending. We know that the government will never stop printing cash. And this is not just unique to the US, by the way. So that really, really bolsters the case for Bitcoin and gold. And, there's no, recently, I think it's been harder and harder to make the bear case against Bitcoin. And I know that there are plenty of bears or people that don't think Bitcoin is a real asset or something viable that should be in your portfolio. But if you look at the performance over the last decade, it's been a fantastic asset. And I don't anticipate that changing anytime soon, especially because the dollar is declining at a pretty precipitous rate.
Yeah. Phil, I want to shift back to the stock market. I mean, obviously you have the Best Ideas Club, and as part of that, you're talking to a lot of the people out there that have their finger on the pulse of the market. I don't know if you're comfortable naming a name or two that they've talked about, and if not, that's fine. I was just kind of curious if so, and if not, any sectors, stories, things you're hearing in those interviews that you think are worth sharing here, or particularly noteworthy for that matter.
Yeah, so that's a great question. And just for some context, Best Ideas Club, once a week, I interview a top portfolio manager or trader or investor, and they give me their highest conviction stock pick for the next 12 months. So this is really a sort of medium to long-term investment idea that the person I'm interviewing has in their own portfolio, usually a strong allocation to, and that they essentially break down the thesis on why they're so bullish on this one name. And I will share one stock. So we've done about 20 odd editions or so this year. And all the stocks together, if you were to put them in a hypothetical equal weight portfolio, it's outperforming the S&P 500 by about 10%. And that's been, we're really proud of that. And that's how we've been able to provide value for our paid subscribers, because they have these stock picks that are usually under the radar, undervalued stocks, and they're just doing fantastic. I think we're at like something like a 80% or 82% hit rate on positive or negative stocks. So one stock that has been not a undervalued stock necessarily, because it's quite a mainstream stock, but it has been an amazing performer in the portfolio, has been Boeing. And this has been one of the least loved stocks, at least in the media, in the headlines, and among investors over the last year and a half or so. And one portfolio manager that I spoke with in April, this was his best idea for the interview. And he broke down the thesis, and he pretty much said, look, Boeing has been absolutely attacked in its own PR strategy, in the media, and it's made so many mistakes as a business over the last couple years. And that's been safety related, or things that have made investors and passengers feel, okay, I don't feel good about Boeing. However, since we did that Best Ideas interview, we published that name, Boeing is up, I think, 37%, 36%, 37%. And that's been one of our top performers. And my contact, this source, his thesis was essentially, it's not complicated. There's two major airliners or airline producers. You have Airbus and Boeing. It's a duopoly, and I want the better one. As in, I want to own the business that's the better of the two. So if you have two companies to pick from, and you pick, let's say, the one that you like better, or you think the business is stronger, then it really is a very streamlined thesis. And obviously, in the last couple months, Boeing has had a lot of geopolitical tailwinds. I think China's contracted a bunch of new planes, and some similar news headlines like that. But the stock has been fantastic this year so far. And we told our subscribers about it in April. And so whoever decided to act on that trade idea, they've done very well for themselves.
Well, Phil, listen, I really appreciate you taking some time out to talk about the big picture, what's behind the newsletter and best ideas, because I think it's a good point. Sometimes being a contrarian can pay, and having a lot of conviction can pay too. So, fantastic idea there. Listen, best of luck with Opening Bell Daily. Hope it works out for you very well, continues to work out, I guess I should say. And I look forward to seeing you at a future Money Show event.
Thank you so much for having me.
Take care.